Zach's Rank Buys, stocks with a short-term buy or strong buy recommendation. Now, here are more Zach's Rank Buys. A jeweler and an equipment manufacturer top our list of value stock picks this week. And Tracey Ryniec, our value stock strategist, is here to fill us in on why she chose these stocks that she chose to make you aware of. The jeweler, Signet Jewelers, SIG, the ticker symbol. It's the largest mid-market jewelry retailer in the world. I never knew that.
Yeah, everyone is, thinks about Tiffany's when they think about the jewelers, but you forget about the second tier, which is Signet, and they have stores in both the U.S. and the U.K. In the U.S., people would know them through their Just Jared line, which is, they have a lot of the mid-market chains that are doing well. The interesting thing is they've been launching a couple of really interesting products that have given them a little bit more exclusivity, especially on their bridal line. They actually launched one by Neil Lane, which is kind of the celebrity engagement ring guy for that mid-market, and that they said in their conference call is doing really well. So they have some unique products that are making people go to their stores, and they're doing really well. You'd think, in these economic conditions, maybe the jewelers wouldn't be doing well. But from Tiffany's and from Signet, they're both saying, things are really strong. The interesting thing is these kind of companies usually go in cycles. They have 1 or 2 down years when there's a recession, and then historically they've had 5 or 6 years of pretty good growth. So we're in about year 3 with Signet of pretty good growth. I mean, they definitely are seeing it in the earnings. This last quarter, they beat again. This is the 11th quarter that they beat. Sales were up in their U.S. division almost 14% for same-store sales. In the U.K., because they got austerity over there, they are having a little more difficult time of it, and sales were actually down about 0.5% over there. But when you combine them together, their overall net sales were up over 10%. That's really good numbers. That's going into their upcoming holiday season, which is very strong. It's the time when people get engaged and like to give jewelry as gifts.
Right.
So they should have a good holiday season here, and you can see it reflected in the earnings estimates, which all jumped after this last earnings report because it was very positive. And the chart is really interesting on this one. It was up for the last 3 years, but it fell pretty sharply in the July-August sell-off. And then it's been up after that, which not surprising because the news has been good and the jewelry, industry is staying strong. But it's interesting because it's not very expensive here, even though it's near these new highs here. It's trading about 12 times earnings, which isn't very expensive for a jeweler. It's way cheaper than its peers. Tiffany, I think, is at 18 times. So you're getting a pretty good value stock here with Signet. We'll see what happens after this holiday season, but they have some real strong lines right now.
Okay. Deere Company is that equipment manufacturer that I mentioned.
Yeah.
They manufacture agriculture and construction equipment.
Right.
So construction's picking up. Is that what we're inferring here?
Yes. Interestingly, everyone knows Deere from the agriculture side. Not surprisingly, because their tractors are famous.
Right.
But they do have the construction side like their peers do, and they have seen sales rise on the construction side. It's still the smaller end of their business, but when you have sales rising in that division, plus on the ag side, it makes for a really strong combination. They actually just reported earnings the week before the week of Thanksgiving. So we just heard from them, and not surprisingly, things are really good for them on the ag side because the farmers are having record income this year. So Deere had a record year. This was just their fiscal fourth quarter. Sales were up 20%. They were up in both the North American markets and outside of North American, but they are seeing real hot sales outside of North America. I think it was up about 31%. So that's strong. They expect the next year's fiscal year to be, more of the same, good growth. Equipment sales are supposed to be up 5 to 10% industry-wide. They see sales for the year up 15%. I think they're being, kind of cautious because they're just coming out with next year's guidance. But, estimates are rising. The analysts expect about 16% earnings growth for next year. That's good quality for this company. But interestingly, the investors don't like it. They haven't liked this company at all in 2011. And I think they think that the ag story is going to be over soon. And so they've been selling these shares. These companies can be very cyclical. And so it's cheap now. It's trading at 10 times earnings. It's, has fallen way back. We've seen a little bit of rebound here, but this could be a good buying opportunity for people who are looking to enter into the agriculture sector.
Do you own either of them?
I do not.
All right. Well, don't forget, you can check out other stock pick ideas for your review. They're on our homepage, Zacks.com. If you're not there already watching this video, then go there. You can link to any of the investing categories that we write about on Zacks.com and get the latest stock picks in each of those categories. With Tracey, I'm Terry Ruffalo.